and here's where price starts to cook. Start looking better now on the daily. So initially what we're drawn towards is this buy side level up here. This buy side level for me is the draw on liquidity for EURUSD going forward. And then ultimately we have this gap up here that hasn't been traded, this balance price could pull price up there. But once we have this buy side up here, what do we note? Price does only two things. Template. Price will either move from external liquidity to internal liquidity. So price only moves from external liquidity to internal liquidity, right? Internal being represented in the form of a fair value gap. So we have an imbalance, balance price range, fair value gap. We have this fair value gap here. It's a positive fair value gap right there. Price took external range liquidity. We're now going to internal range liquidity. Then we go back to external range liquidity. So what we have here is buy side. Can remove this now. External range liquidity traded, buy side, buy side. Now we're going to annotate the gaps, right? We're going to annotate the gaps of this run just to see why price should hold this fair value gap. So we have initially this volume imbalance. We can mark this as red, put it 2. Price traded the volume imbalance. We traded more than the 50%, which is around here, of this volume imbalance, right? Then what does price do? Leaves the gap open, and price doesn't come back to this gap. Why doesn't price come back to this gap? For one reason, because this gap becomes a breakaway gap. Put this in the middle. This becomes a breakaway gap on the daily time frame. So price traded more than the 50% of this volume imbalance. Pardon me. Price trades more than the 50% of this volume imbalance. We leave a gap that we don't end up retrading, and then we take out a high again. So this becomes the breakaway gap. If the 50% is traded of a fair value gap, and there's a large gap that follows it, can be used as a breakaway gap if this high is taken. So then what else we have? We have this up close candle in the form of a mitigation block on price. That lines up very nicely with this fair value gap. But I don't like the overlap, so what I'll do, I'll put a middle line right there. There we go. So now we have a clear picture of EURUSD. Breakaway gap, more than the 50% traded of this volume imbalance. Breakaway gap, so price has no reason to come back lower. First fair value gap alongside with this mitigation block. And if we take the fib, draw it from that swing low to this high, it's in discount. As you can see right there, that's in a discount. So now we'll trade the full hour to see what price has in store for us. We'll clean this up. There we go. Then we have the price numbers there back there. So price has external range fair value gap on the daily, and the mitigation and equilibrium. So if we trade price into this fair value gap, I'll look for SMT between either between the daily cycles or SMT between the session cycles. But this, once the mitigation is traded, so the 50% of this fair value, price is likely to draw towards this buy side liquidity. So that's simple picture on Euro USD. Recording very quick overview of what I expect Euro USD to deliver next week and my bias going into next week. Yeah, that's it.